If you've been faithfully contributing to your 401k for years, but your balance doesn't seem to grow like it should, I'm about to show you exactly why. Your employer's 401k could be quietly costing you $100,000 or more in hidden fees, poor fund options, and unnecessary costs. Here's the thing. You're a smart, successful woman. You've built your career. You manage complex projects. You lead teams. You make decisions that matter. But when it comes to your 401k, the system is designed to be confusing. Today, I'm going to give you a clear step-by-step framework to identify these problems and fix them. I've created a free fee audit calculator that helps you uncover exactly what you're paying in your 401k and other investment-created accounts. It includes a dedicated 401k analysis section. Most successful women I work with have never even seen these numbers laid out clearly. And this isn't about being uninformed. It's about the system being deliberately opaque. These fees are buried in 50-page documents, listed as percentages instead of dollar amounts, and charged quarterly while being disclosed annually. The free fee audit calculator does this math for you automatically. Just plug in your numbers. The fee audit calculator includes a comparison section that you can run these calculations on your own funds, and it only takes about 15 minutes. And the clarity, I have to tell you, is worth it. The goal isn't to be cheap, it's to be efficient. I want every dollar working for you, not for your fund manager. Now let's talk strategy for a moment. Your 401k is a powerful tax-advantaged account, but it's not always your best option. I know I'm on the other side of a lot of people on this one, but hear me out. And by the way, if you're finding this helpful, I share strategies like this every single week. So if you haven't already, go ahead and subscribe so you don't miss the next one. And definitely share it with others. And there's one account that most women underutilize that could be worth hundreds of thousands more in retirement. I'm talking about the Roth IRA. And here's why it matters. With traditional 401ks or a traditional IRA even, you get a tax deduction now, but you have to pay tax on every dollar you withdraw in retirement. Plus, starting at age 73, the government forces you to take money out whether you need it or not. Those are called RMDs, or required minimum distributions. Guess what though? With a Roth IRA, you pay taxes now on the money you contribute. But here's the magic. Every dollar of growth is tax-free. That's right. Every dollar you earn after you pay tax up front is tax-free. And there's no RMDs ever, required minimum distributions. So your money can grow tax-free for your entire life, and you can even pass it on to your heirs tax-free. Let me show you what this looks like in real numbers. Say you contribute $7,000 per year to a Roth IRA for 20 years. That's $140,000 in contributions. At a 7% average rate of return, that grows to approximately $287,000. In a traditional IRA, you'd owe taxes on the full $287,000 when you withdraw it. And at a 22% tax rate, that's $63,000 to the IRS. So in a Roth IRA, you keep all the $287,000 tax-free. That's a $63,000 difference on just $7,000 a year in contributions. And the longer your money grows, the bigger that gap becomes. Here's the systematic approach I use with my clients. The Roth First Contribution Framework. Step 1, contribute enough to your 401k at your office, or if you are self-employed and you have a solo 401k, you want to do that to get your full employer match. This is free money to you. If your employer matches 50% up to 6% of your salary, contribute at least 6%. That's a 50% instant return, beats everything else. Step 2, max out your Roth IRA. For 2025, that's $7,000 per year. Or if you're over 50, it's $8,000 per year. This should be your next priority because of the tax-free growth and no required minimum distributions. Now, there are income limits. For 2025, you can contribute the full amount if your income is under $150,000 if you're a single filer, or $236,000 if you're married filing jointly. Above that, it phases out. If you're over the limit, ask me about the backdoor Roth strategy in the comments. I'm happy to share that with you. Now, step 3, we're going to go back to your 401k for additional savings. If your employer offers a Roth 401k option, consider using that. You get the same tax-free growth as a Roth IRA, but with higher contribution limits. In 2025, it's $23,500 or $31,000 if you're 50 or older. If your plan only offers traditional 401ks, that's still fine. The tax deferral is valuable, even if you'll pay taxes later. So this is the framework. Match, then Roth IRA, then back to the 401k has helped my clients optimize tens of thousands in lifetime savings. The key is understanding the sequence. Now that you understand the framework, here's your action plan. This week, I want you to download your most recent 401k statement. Use the free fee audit calculator to calculate your total fees. This month, I want you to compare your current funds to low-cost alternatives. Switch back to index funds wherever your plan offers them. Check if you're getting your full employer match. And within the next 90 days, open a Roth IRA if you don't already have one. Set up automatic contributions to your Roth. This is super important. Check if your 401k offers a Roth option. Document your optimization decisions for future reference. These small shifts can add hundreds of thousands to your retirement over time. And now you have the systematic framework to make them. If you want to see how your 401k really stacks up, don't forget to download my free audit calculator. It really is awesome. It includes a fee calculation worksheet to identify exactly what you're paying for, a dedicated 401k analysis section, also fun comparison tools to evaluate your options, and lifetime cost projections so you can see the real impact. Go to jillcollins.com/fee audit and download it for free. This calculator has helped many of my clients uncover so much money. It'll help you make sure your retirement plan is actually building wealth and not draining it. If you found this valuable, please hit subscribe and the notification bell as well. I release new financial clarity videos every Sunday. I also invite you to share this with a friend who needs this too. And if you're ready to go deeper and want personalized help optimizing your complete financial picture, there's a link in the description to book a discovery call with me. I'm happy to serve you. Thanks for watching. I'll see you next week.